everyone, and welcome to Stock Market Today. Alyssa Corman, Ed Carson here with a look at the action in today's session, where we saw modest declines for the major indexes. We'll get into that here in a little bit. Ed, preview the couple of names that we're going to be taking a look at.
Good morning, good afternoon, Ali. We're going to take a look at Upwork and we're going to take a look at Mastercard. Both had sort of flashed some buy signals today, whereas some of the more highly valued stocks didn't do well. And we're going to take a look at some of the ARK ETFs that reflect that.
Yeah, so potentially a tell for one area of the market there. But let's take a look at the major indexes. Here is the NASDAQ composite, which finished down about 0.2% for the day. We had the S&P 500 and Dow down 0.3% each. And Ed, small caps lagging pretty badly, down about 1.8%.
Yeah, and at first I thought the financials might be the reason for that. We can get to that later, but the NASDAQ reversed from a record high. I mean, look, the NASDAQ doesn't look too bad. In fact, you could argue that it's a good thing because the NASDAQ was getting close to extended. The big cap NASDAQ 100 was getting even more so. That one was well over 7%, at least intraday. It came back, but the NASDAQ 100 still outpaced. And I think one of the concerns is that not only is it that the big caps are getting the composite extended, is that you could also, that the advanced decline line for the NASDAQ is that the breadth is not that great. That yes, Apple had a good day, Microsoft had a good day, and all those mega caps have been doing well generally, but underneath the surface, it's becoming tougher. So it's been a stock pickers market for a while. Yeah. Now it's getting to be tougher even in that front.
And a quick look at the S&P 500 as well. So down off of yesterday's high, and the Dow, we'll take a look at that too. Hit a closing high, but backed off a little bit today. So no real warning signs here. The Dow and the S&P aren't extended. It's really the issue with the NASDAQ still.
Yeah, so that's extended a little bit. It's some of those super growth techs, super tech stocks. So it's not the other ones. The Russell is a little bit concerning though, as you were bringing up earlier. That's not great. Back below the 50-day line. You can see the relative strength line very weak. I'm not sure exactly all the reasons in there. Earlier, financials were really struggling, but then the 10-year treasury yield came up nicely. So is a XLF, it came off its lows, though not great. So we're not sure what's going on there. And then there's a few meme stocks that have huge values that got stayed in there, like AMC. So that's having an impact because it's got a bigger market cap than a lot of the Russell stocks.
So weighing on the Russell 2000, the IWM ETF is what we were taking a look at there. So still now seeing this bifurcated market swinging the other way, it seems like, at least with a notable impact here with small caps today. And as you said, a stock pickers market. But for those stock pickers who were watching Upwork today, maybe a buying opportunity. We had a little early entry, slightly earlier than the handle entry for Upwork that we drew together on IBD Live. But this stock backed off of its intraday highs, still closed up about 6% for the day with some strong volume behind the move.
Yeah, it really was nice volume. A lot of the, it obviously backed off the RS line. It got above the handle high at least, and it's pretty high up in that. So that's pretty encouraging. As you say, it's probably still actionable because it's above that early entry. Given that the market came back and some of the more highly valued names had tough times, this was obviously one of the winners. And it had an early entry before. And as you're drawing that just below 52, that was a good place to start a position. And you could have filled it out here. It was fine to start a position today. But so this is why it's nice to have those early entries, even on, and when you buy as close to the buy point as possible. So even if you bought at the official buy point, it would have been nice to buy at the early entry, but if you bought at the official buy point, you weren't going to be down too much today. It was, it's not too bad. So that's nice intraday breakout. Yeah, it's pretty obvious in this one what was going on there.
Yeah, but if you have those alerts set ahead of time, and this is on your list, it meets your screening criteria, you might be able to get in at, like you said, at an optimal price instead of waiting the next 20-30 minutes or so for it to get extended.
Yeah, exactly.
Okay, well, now let's take a look at Mastercard, ticker MA. I feel like it's been a little while since we've looked at Mastercard. We've been focusing a little bit more on PayPal, but Mastercard with a nice pop today, volume behind this gain as well, Ed, sending the stock over the 380 level.
Yeah, so there was, you could say a continued bounce off the 50-day, 10-week line, because it's still not too far above that. And especially when it was getting above 381, say, it provides an early entry. This one's had a tough year. I mean, the economy fell down, cross-border travel is still weak. So the RS line looks terrible. But if you look at a monthly chart, before this year of underperformance, it was a big winner. It was a long-term leader because it had years of outperformance. It finally fell off because it sort of broke some of the rules on that. But if you're going to buy a long-term leader, and if you want to think maybe it could reestablish itself that way, we don't know. Buying around the 50-day line is often the way to go because they'll have these up and down situations. So buying in the breakout can sometimes be riskier than buying closer to the 50-day line. So it was a nice move in volume. So maybe this is a sort of a turnaround play, but we'll have to see.
And I mentioned PayPal, so we'll just maybe quickly check in. We've been talking about the breakout over the 278 level, also a handle breakout. It's technically still in the 5% buy zone from this handle, but we have earnings in 2 weeks, just like we have for Mastercard as well. So earnings season is ramping back up, a lot of bank earnings this week and next. So that's something else. In addition to areas of the market potentially getting overheated, having earnings right around the corner is something that investors should consider when making new buys.
Yeah, I think this is also, I think people might be expecting companies to actually have a decent forecast this time. It's like, okay, it's not so crazy. You should be normalizing a little bit. What do you think is going to be, what's happening in Q3? What do you think for Q4, maybe even beyond? And so I think that guidance is really going to be important this time from companies.
It is. And checking in on the highly valued growth area of the market. Proxy for that is the ARK Innovation ETF, ARKK, which had a pretty big move off of its low from mid-May and ran up all the way to the end of June. So kind of almost doubling here, or at least a very big move off of these lows. So a pullback here kind of expected at this point.
It is, and you can see that with a lot of stocks, and not just stocks ARK owns. It's not because they're picking bad stocks all of a sudden or anything. It's had a big run, but you look at a lot of stocks that they own. Tesla's actually held up better than some. It didn't run up as much, but it didn't slap. But Palantir, Digital Turbine, there's a lot of these high growth names that had big runs, and now we're pulling back. And so this is giving you a gauge. If you're wondering why, hey, I bought this stock, why is it down 10, 15% over in July? Well, it seems to be that's the trend. And it's not just the highly valued stocks. The advanced decline line is such, it's just a narrowing market. And so some of the stocks that were moving up, it's just harder to get that trend.
So maybe we are seeing new setups presenting themselves, because I feel like maybe the struggle for investors when we saw this shift a couple weeks ago to the NASDAQ being more in the spotlight, starting to outperform software and medical names breaking out, is they were presenting early entries from some pretty ugly patterns, or at least really low in bases. So maybe these setups will offer more good opportunities.
Yeah, I mean, this doesn't look terrible. It's an understandable pullback. It's just something to recognize, that investors just have to recognize where it is in some of these stocks, and when the technical action there, not just for that stock, but also see what the sector or that kind of trend is happening. And it's just pulling back right now.
And ARKG, the genomics ETF for ARK, in a little bit worse shape here, Ed, with it closing below its 200-day line. Once again, investors should be aware of this and not try to buy these kinds of stocks on the way down, but wait for some strength to come back in.
Yeah, and they very well may come back. I just have to evaluate. These are sort of indicators for some of the stocks that often a lot of growth investors like, and it's also just indication of how the state of the market is. Just once you get past Apple and Microsoft and some of these trillion-dollar companies that are powering higher, it's just a little bit weaker. May think a little bit more about making sure to cut losses, maybe even sell a little bit into strength. Just be thinking that little bit of that mentality in the coming days until you see a more more positive breadth in this market.
Good portfolio management tips there to end on. Ed, thanks for that. And thank you all for watching. If you are a Leaderboard subscriber or trialist, make sure you check out our Leaderboard Scorecard monthly webinar, which is happening in about 15 minutes from now. So we got to go. We got to jump. We'll see you there, and we'll see you back tomorrow morning on IBD Live. Thanks, everyone.